Well, let's hit on that, go into more details there, because obviously everyone's talking about the markets, and with the markets being down, people are questioning whether we're going into call it quote unquote bear cycle for a little bit, or we're just consolidating. What do you think is happening in the market?
So, interesting one. I mean, we did put this up in our recent market update on Telegram. So the Saturday crash happened. Of course, there was a low liquidity situation. But what was interesting to us is it seemed like a lot of the persistent selling was coming more from the Chinese markets. The reason why we say this is, if you see the funding rates, the perps, they all went negative on the crash, but the Western, more global exchanges normalized very quickly. But I think until today, the Chinese exchanges, OKX, Huobi, Bybit, they are still trading at a negative funding rate. So there is persistent selling there. And one of the triggers for that move down was weakness in the Chinese stock market as well. There is this perception that the Chinese government is getting increasingly hostile to the US due to geopolitical reasons. TT showed intention to unlist or delist from the New York Stock Exchange. There were some continued defaults on some of these property companies. So weakness in the Chinese stock market, and then selling on the Chinese side. So it seemed to be a Chinese-led move in poor liquidity, as well as some overall profit-taking stance from the market, because there's everyone's worried about the Fed tapering next year. Plus, you have the Omicron fears that are coming up. So sort of confluence of factors there. But with that said, the market has held up pretty well, and with the persistent negative funding, the pattern that we do see is it tends to create a short squeeze, because you have then the market is flipped and leveraged on the downside. You have a spot move, you create liquidations on the top side. So we think there is a potential for the market to have one last squeeze up. But after that, as to how the macro environment will look, a bit tricky. I think very, very tricky. But one thing that Paul did bring up was the turn of the calendar year after a year that everyone has done so well. When it goes from 31st Dec to 1st Jan, you have a situation where your 100% profit is back to zero, right? So any drawdown from there is a loss. And psychologically, it does make sense to take some money off the table. That kind of profit taking could trigger a whole, the top of the bull market.
And that's just funds doing their high watermark.
Exactly, yeah. That psychological effect, cannot be ignored. So I think we are very cautious going into next year. I mean, again, one interesting thing that Paul said was that he would never short crypto. So in the back of this is, it is a very under-owned and new asset class. So it could push way beyond your expectations in terms of high valuations. But worth noting that caution is advisable at this point. There are a confluence of factors that could see the market trade lower.